Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, if you're looking for a great place to find great sales tools for your salespeople to sell more stuff, go to heyarrow.com and check out all the great products that Arrow has to offer. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and is kind enough to come on a couple times a week to talk about what's going on in the marketplace. So, Chip, how you doing this morning?
Hey, doing well. How you doing, Casey?
Not too bad, man. Well, it's we're in the middle of harvest. You know, I saw yesterday the harvest progress reports come out like they do every week, and looks like about 50% done across most of the platforms out there. But the one thing that keeps popping up in the news and it keeps getting more and more legs under it is the wheat market. And I want to spend a little time with you talking about what's going on in the wheat market. So if you take a look at some news that's out there now, you know, Ukraine has set some export quotas as far as what they're going to let get out of the country. Russia's export tax it keeps going higher and higher. And as you take a look at these various reports that come out, ending stock reports, the wheat number keeps getting smaller and smaller. And we are up against some more, I don't want to say we have total problems right now when you start looking at what got planted for the fall, but you know, they got some timely rains, but coming off of a pretty dry spell. So it's going to take a lot of rain to get some of the stuff going. I guess, what are your thoughts on the wheat market right now? And as you take a look at world food supply, you know, wheat and rice both play a big factor in that. So what's your thoughts on wheat as we move into the wintertime here?
Yeah, all those factors throw in there, add to that some problems in Europe. They had a pretty dry summer. I think their production was down, and then the drought in the northern plains in Canada really decimated the spring wheat crop. And so for the first time in many, many years, the wheat market kind of has been leading us higher and the leader to the upside. You know, this most recent USDA crop report pegged the world carry out 277 million tons. That was below the lowest estimate. It was a drop of 6.1 million metric tons. I believe that was like a 6 or 7 year low. It's not like we're running out. It's not that critical of a situation, but it has tightened significantly over the last few years. And, you know, you look at oats, our new all-time highs here, what they've recently traded, I think 660, 670. Corn, we have a good crop here, but, you know, as far as the demand on corn, that has ramped up. So all these feed grains, whether it's oats, wheat, corn, they're kind of working hand in hand right now. And, you know, that bodes well for United States export demand, I think, going forward, because as you hold those bushels off of that Black Sea market, whether that be Ukraine or Russia, what that means is we're going to eventually start picking up more export demand. We've already started to see that, actually. Hasn't been wildly dramatic in the case of wheat, but it has been ramping up, and they've been some decent, you know, weekly export sales totals in here. And, you know, China's been taken not so much our wheat, but they have been importing some other, world exporter supplies of wheat. And so that this wheat trade worldwide has definitely tightened up, and eventually that should mean better demand for us and our carryout. 580 million according to this last report from the USDA. That was down 35 million. Good things happening. And but with all that being said, we raise wheat in every continent on Earth, and it doesn't take very long to get production ramped up. So we really have to keep our eyes on the ball here. And we've got 22 wheat in the case of Chicago. It has traded 750-ish. It's a little bit under that now. 22 Kansas City wheat is just north of 750. But even the 23, well north of $7. If you started seeing that up towards 750 or above, I think that's an opportunity for producers to really think about implementing some strategies to try to lock some of that in. It's been a while since we've had $7 plus wheat. I don't think you can rule out $8, maybe a touch above on both like 21, maybe not December, but like the March or the May contract of Chicago and Kansas City. But when you start getting north of $8, you start getting into some rare air. And again, it's just taken, they say the old economic saying, the cure for low prices is low prices. We've had multiple years of low prices in wheat, and that cut acreage down, and we're coming off of a couple years with lower acres here in the United States, and now you sprinkle a couple production problems in different parts of the world, and all of a sudden the shrinking acreage, shrinking supply because of production problems, and now we see prices react to the upside, and the opposite's going to be true of that. When you get north of $7.50, maybe approaching $8, that's going to stimulate some extra production around the world. Won't happen overnight, but 2-3 years out, this thing could have a long tail. So it's just part of that normal cycle that we see, and it's good right now. It could be some upside to this thing, and that's good for wheat producers. The other thing too, sprinkling into this is this whole nitrogen situation, and
Right.
That's kind of out of control. China reportedly going to suspend up to 30%, or they're 30% of the world's nitrogen production, and so far it sounds like they have somewhat suspended exports. India and other Asian countries get a lot of their nitrogen production from China. Europe has its own issues, and so what does that mean for acreage makeup? Will that push more wheat acres? It's not quite as intensive on the wheat as far as comparing that to corn and wheat. So there's a lot of things that could affect acreage here going forward, and the availability of nitrogen. And obviously that's going to be a direct, if you have to cut back on nitrogen because you can't get it, that's obviously potential yield drag. So there's a lot of moving parts in this thing that it's going to make it interesting. And then throw Mother Nature, right? We're gonna need some timely rains in the plains. We're getting stuff planted, I think, in decent shape, but a lot of those areas, Kansas has been drier than normal. Certainly all the way up through north of you guys in Nebraska,
Yep.
Into the Dakotas, Montana. They haven't fixed that problem yet, so we'll see what kind of moisture they get over the winter and into spring. So Mother Nature is going to have the final say-so in this, regardless.
Yeah, we need a lot of help from Mother Nature when it comes to moisture. It's dry everywhere. We need some snowpack in the mountains to get some irrigation going. So there's a lot riding on this winter as far as snowpack goes. And hopefully the wet, cold winter thing is right this year for a change. All right, man. So let's jump over and take a look what's going down in Argentina. So we've got the Brazilian first corn crops getting planted right now. They're running and they're doing well. They've got the moisture that they needed, and those kind of things are looking like they're supposed to. But you flip over and look at Argentina, and they're really dry. And so a couple things. That's a soybean area and also a wheat production area too. Talking about wheat a little bit. So as you take a look at what's going on in South America right now, what are your thoughts there as we move into their spring or winter type deal?
Yeah, definite mixed bag. Argentina's a large corn producer as well, so they're a big player in this world supply situation. We're still entrenched in La Nina. La Nina at this time of year for South America historically has Argentina trending dry, and they definitely are right now. It's early enough in the season there that they have some time to get some precipitation, get healed up, and get stuff planted. They're not as far along as Brazil to the north of them. And so that's definitely going to be something the market watches from, as you mentioned, corn, beans, and wheat production. How is Argentina getting along? On the flip side of that is Brazil, where they're going to plant a massive amount, probably a record amount of acres. They're like double the pace, the planting pace that they normally are. They've gotten some rain right now, and it's very early on. It looks like you have the makings for maybe a massive crop in Brazil. And so as you get into winter, that might be part of the reason that this bean market, now that I think we're just north of 60% harvested nationwide in beans, so we're definitely on the downside of harvest in here. And we've had several good days this week, running cotton beans. And so that's something the market's going to pay close attention to as you get into winter time frame. Doesn't mean a lot. Now. I mean, they're definitely dry. But I think if you push this, say, a month from now into mid to late November, and they still haven't received much more rain, and they're still struggling with dry weather, that's going to be something that starts, affecting the bean market especially, but all our markets. You mentioned they're fairly large wheat producer, big corn producer. Sometimes also, the one of the main production areas of Argentina is not that far and kind of butts up against some of those big producing areas of southern Brazil. And so that's what the market's going to watch closely for too. If that La Nina keeps that area dry, that could maybe drift up and affect some of the high producing areas of southern Brazil as well. I think that's more of like December, January type of an issue where the market's going to be more responsive to dry weather down there. And it's definitely as tight as we are, even though the USDA has raised up bean yields and kind of got the double whammy. They found 80-some million bushels of beans on the September 30th stocks report. So our bean carry has gone up, but it's still sub 8% stocks to use ratio. And so if there is any threat in the southern hemisphere, between now and January, February, the bean market could get explosive. And just potential for massive volatility, because on the flip side of that, if it goes well, and even if Argentina has an average crop and Brazil has decent yields, they are set for, with the acreage expansion they've had and record profits for the last 3 years running. How it just seems like it's hard to get a weather issue generated, right? Look at what we had here this past year, and still going to come up with one of the biggest bean yields we've ever had. Brazil's so spread out north to south in their production, it's hard to get a general problem. And so that's a big fear in the back of my mind is you get all the conditions right in Brazil, and they could end up with an absolute monstrous crop. Like right now, they're projected, I think, 142, 143 million metric ton crop. I mean, that's several million tons bigger than the biggest crop they've ever raised. And I think you could expand that if they get the right weather down there, and maybe push that up 145, 146. Just an absolute massive crop. And we'll have to contend with that, spring into summer if that's the case. But it's very early on. And so, again, the market's going to watch that weather situation. And knowing it's La Nina, and knowing that historically that trends Argentina much drier, possibly into southern Brazil as well. But still too early to have that to be much of an impact. I think we're 30, 45 days away from seeing that be a bigger issue or more focused on the market's standpoint.
Right. Okay. One last thing that it just struck some curiosity this morning when I was going through the highlights, and typically the second round that we do this, we talk about the cattle market, but just this one headline kind of caught me here. So China approves Russian beef imports. Now, I'm not that familiar with the Russian cattle market and what that looks like, but China's been buying a lot of beef from the U.S. here of late. So what's that look like for the beef market?
That's a great question. I'm not very familiar with that either. I don't know how big of a deal that is. Maybe that's a long-term issue that being cynical that China is going to get into some joint ventures or something and try to put some money into the Russian beef industry. I have a hard time believing that's a massive issue right now, but it does go to show you that China's not stupid, right? We have this phase one trade deal coming to the end of that. They've not hit those numbers yet. They said all along from day one, we're going to buy when the market dictates. If there's cheaper supplies somewhere else, whether that's South America, whether that's somewhere out of Asia, Russia, they're going to get those supplies. So I don't know that that's wildly bearish right now, but it's interesting. It's very interesting because they've recently suspended, Brazil beef. They had a mad cow situation down there. Sounded like it was isolated. They've had kind of some back and forth tensions with Australia, where they get a lot of beef from Australia. They've been buying, a fair amount from us, record amount from us, because they for years and years they didn't buy any of it, and they're there almost weekly for a small amount of U.S. beef. So interesting development for sure, to say the least.
I think it just kind of shows a little bit that, like you said, China's going to go where China can get the best deal, and
for sure
they're not going to be dictated by anything else. So it's one of those things where these trade deals that we do. I mean, China's no dummy to trade. They've been doing it for a very long time, and they've gotten pretty good at it over the thousands of years that they've been trading back and forth with other places. So it'll be interesting to see what happens. It just caught my attention, and it's one of those, like you said, it's just one of those things that kind of stands out a little bit as something to pay attention to. All right, last but not least, you talked about soybeans a little bit already and where we're at there, but you talked about the vegetable oil market and what that was doing for the soy market. So talk about that a little bit.
Yeah, it's been a very interesting situation here for probably the better part of a year. The old saying from the floor days when there was a floor at the Chicago Board of Trade was that soy oil cannot lead a bull market in beans. And that was proven wrong. And that might have been true for 50, 70, maybe 100 years. But this, over the past year or so, has been the first time I can ever remember that soy oil led a bull market in beans. And that has, again, multiple issues, right? There was a lot of palm oil production problems in Malaysia, a big provider of palm oil to China and India, and they had some production problems. We in the northern plains, sunflower production, canola, what some call rapeseed. I think it's kind of, in my mind, one and the same. That drought in the northern plains in Canada decimated that production, and so you've really had some vegetable oil shortfalls and still massive demand. And our crush margins here domestically have really exploded higher in the last couple of weeks. Just a straight up move in domestic crush margins, meaning that allows crushers to buy beans, crush the beans, sell the meal, sell the oil, and make good profits. And so that's good for bean demand. And we've kind of seen that response in the bean market that, we're well off the lows from a couple of weeks ago, even with the bearish report. And it's right on time because we're 60% harvested. It's, last half of October, and that's typically when we see a harvest low and then some sort of a rally into November and December. So that's good news. Chinese crush margins have improved as well, and that is what drives a lot of their import demand for beans is crush margins. If they have good crush margins, they're going to be a bigger buyer of beans from Brazil, Argentina, United States. Import that, crush it, and make a profit. If their crush margins have been under pressure and negative, they're not going to import as many beans. And they have been fairly negative. We've seen the effects of that. That not only do they slow down imports from the United States, they've slowed down their imports from Brazil a little bit as well. Some of that is because Brazil doesn't have as big a supply now, where we're at in their growing cycle. And so it's good. It's good news, good demand news for beans. I think it's something that's been supporting the bean market here over the past week. Continues to overnight. Soy oil's up triple digits. Beans have been up double digits here, backed off a little bit. Soy oil now 116 higher, beans up 9.5. So that's something that continues to drive the profitability of U.S. crushers and increase demand for beans. And that's a good thing right now.
Yep, absolutely. Well, good stuff, Chip. A million things going on here. Plenty of things to pay attention to. If people are working on that plan, need some help developing that plan, what's the best way to get a hold of you guys over at Blue Reef?
Yeah, the best way is just give us a call, 309-550-7213. Happy to help walk through a lot of these moving pieces and how the gears, all work together and build and develop a risk management plan and help execute that.
Right on. Well, thanks for being on the podcast, Chip.
You bet. Thanks for having me, Casey.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest edition of the Moving Iron Podcast. Also go to MovingIronLLC.com where you can find everything that's Moving Iron related, blog posts, Moving Iron Summit coming up. More information will be out that soon for 2022 and what that looks like. Also, you're going to be able to see all the entire library from podcast number 1 through podcast. I don't know how many podcasts I've got out there now, but they're all there. So go check those out. So with that, I'm Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out. Can't talk today.
You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon from product development through sales and service. To find more or become an Axon dealer, head over to agmarkets.com.
Moving iron in the 21st century. Hard-working people working hard.